This is Eric Muada with Muada.com for the week of May the 18th, 2012. Let's take a look at the market here. We see that the Nasdaq has managed to come back to its declining 10-week moving average. So we'll see what the market is going to do as it comes across that declining moving average. Either it's going to muscle its way higher or find resistance in that area where has been resistance over the last I would say, well, not resistance, but this is an area where exactly where the market stalled. Also, we'll notice that the RSI closed at about 50. We'll see whether this week is going to bring the market back below 50 and probably for a decent slide. But so far as the market is concerned, I'm seeing signs of a market that might be moving higher short term, and I'll show you why I think that. If you take a look at the Nasdaq from a daily chart, you'll see that after this consolidation period here, we are back in this area, which was initially has been established over the last year or so as resistance here, resistance, great breakout here, and then we broke down here. This has been some kind of a roof in the market. We see whether the market is going to continue finding trouble staying above that level, or if it's gonna muscle its way higher. Right now it's very hard to say because we're just in this area here, still in this area here, where the top side of this area is the market gonna move higher or find resistance like it did prior here, and also multiple occasions here, and now we're at that level. So it remains to be seen how the market is gonna do about that. Now remember, the market did have a nice Friday close, up 1.2% because it moved its RSI above 50. So we'll see whether we have a move back below 50. If we do, expect a big down day, just because that's what happens when markets move above and below 50. On the dailies, as far as the MACDs are concerned, all these three here are different MACD settings. We see that the market has crossed over and is pointing to move back above zero. Again, a crossover already taken place here, and we already crossed over here and above zero on this MACD setting. So momentum remains to the upside day to day, even on a week to week basis. So that MACD showing us the market might be moving high. If you take a look at the Dow, the Dow is solidly above the 10-week moving average, and so that is a sign of strength. We'll see whether it holds above that or if it immediately reverses and moves back below the 10-week moving average. So signs of life as far as the Dow is concerned. Also, we saw the Dow move its RSI above 50. We need to be careful because if it moves below 50 on a weekly basis, that might be reason for a pullback on a week-to-week basis. So as far as the market is concerned, again, signs of a bounce, momentum to the upside. We'll see what happens coming over the next couple of days. Also notice that the Dow is now back to, on the daily chart, back to its declining 50-day moving average. So are we going to stall there, or are we going to consolidate, move higher? So we'll wait and see what happens. Short term looks decent because I see that we are breaking out of this range here on the dailies, which was a requirement before we move higher on the RSI. So there's a breakout here, and as far as that's concerned, that shows that the market is gonna be looking to move higher on a short-term basis. If it can't move higher, then it's gonna suggest that the market has stalled around a declining 50-day moving average. If a market stalls around a declining 50-day moving average, usually that's not a good sign. It shows that we are going to be seeing a movement to the downside. So it remains to be seen what happens. As far as the MACDs are concerned, we see a MACD breakout here, which is a sign of momentum, and we see already had a crossover there. So momentum remains on a day-to-day basis to the upside for now. If you take a look at the Dow from an hourly chart, you see that we are trying to break out here, very early signs of a breakout here on the RSI setting. So right now we need to see it move higher. If it reverses and forms an inverted V-type a reversal, for example, if we wake up beginning of the week and the market rolls over like that, that's going to be a sell signal. But for now, looks good. You see that the moving averages on the hourly are crossing over now, which is bullish. So like I said, short term, things are rolling in the direction of the market wanting to move high. Take a look at the Dow Transports, which has been trading between the 50-day moving average and the 200-day moving average, still in that range. But what I like about this Dow Transport is, for now, we see that it's breaking out above this RSI top line here. That is a short-term breakout, which suggests that movement might be biased to the upside on an hourly basis. Again, you see the MACD is looking sharp, looking good, pointing higher. Momentum still remains, like I say, day to day on the positive side. If you take a look at the New York Stock Exchange composite on a monthly basis, you'll see that take the lows of March 09, closing lows of July, August 2011, and you draw a straight line, you see that we are bouncing exactly over there. So that's a nice bounce. Also notice that the RSI, if you take the lows of early 2009 and the lows of summer 2011, draw a straight line, you see we are bouncing exactly at that level. So even the monthlies are trying to show signs of life. If that's the case, then maybe this market wants to move higher, and there's nothing wrong in finding quality breakouts and trying to see whether they find movement to the upside. So quality breakouts would be the way to go for here on our short term. If you take a look at the US dollar, and I talked about this, the fact that we could be forming an inverted U type reversal here, which is what we got. That's not a good signal. The last time the market did that, as far as the dollar was concerned, corresponds to the highs of early 2012, and we had a pullback, and so we are doing the same thing here. That's not good. The only way the dollar comes back in play, so right now, if you use this chart by itself, that tells me this market wants to move high, because the dollar is really not giving us a buy signal, actually giving us a sell signal on a weekly chart. The only way the dollar changes this chart, if it can manage to break out about this new 52-week weekly closing high of 81.83. So the only way the dollar can come back in play is if it breaks out above that level. For now, this seems like a broken chart. Now if you take a look at the UUP, you see that it's very obvious that we are trying to break out above 22.75. Did that for 2 weeks, but now we are back below that. That's a failed breakout, and failed breakouts are notorious for pushing charts lower. So if this dollar chart is going to suggest a dollar that is going to be on pullback mode, that suggests that the stock market is going to be in play short term. So the weekly charts, as far as the dollar is concerned, are looking bearish for the dollar, which again suggests to me that the market wants to move higher. If you take a look at TZA, 3 times small cap financial bear ETF, what I wanted to point out here is there was a breakout attempt here that failed. That's not a good sign, number one. That's one red flag. And then we have a break of RSI support line. That break is another red flag. So this is not an instrument you want to own, which tells me that the market might be trying to push higher because these these bear ETFs are breaking down. Take a look at FAZ, 3 times financial bear ETF. Again, same scenario. We had a failed breakout attempt here. We broke out above that level and filled back, went back below that level. So that's a failed breakout. That's a first red flag. And then the second red flag is a breakdown of this support line from the RSI. That suggests that this instrument might be moving lower in the coming days, weeks, which suggests that a market short term that wants to go higher. If you take a look at the SOXS, which is a 3 times bearish semiconductor ETF, we see that we were trying to break out here, had a breakout for 2 days and then rolled over. Also happens to be an area where this was a break point previously. We broke below here, went to fresh 52-week lows here, so we had come back to this level here, could not hold. which is also where we find a declining 200-day moving average, and now we are pulling lower. We also have the early beginnings of a break of this RSI support line. All that told tells me that this is an instrument that is also looking to go lower short term, unless they can bounce immediately and rebuild the charts. But for now, this chart tells me that the S might be in trouble, which means that the semiconductors might be back in play. If you take a look at the Indian market as just a sample of what world markets look like, it seems to me, I'm not, there's a left shoulder there, inverted shoulder, right inverted shoulder, and then you got your head type formation here. So this could be an inverted head and shoulders formation here. Shoulder, head, shoulder. That suggests, if that's the case, that then these markets really want to push higher over the coming weeks, just based on this inverted type, shoulder type, head and shoulders type formation. If that market is, and again, you'll find similar settings in most world markets. The Brazilian market, the German market, London market, all seem to have this type of monthly chart support. If you take a look again at the Indian market from a monthly view, you'll see that if you take the lows of monthly closing lows of 09, monthly closing lows of late 2011, draw a straight line, you see we are bouncing exactly on Q. Now that's something we have to pay attention to, because the market's been stalling here at the top line when it's trying to rally, yet it's finding support on the downside here. So we are actually stuck in this range here. But for now, it seems like the RSI is also trying to confirm a bounce potential with this double top here on the RSI, double bottom on the RSI here and here, which tells me on a monthly basis this market wants to move higher. So we played the way we see it. If you take a look at the VIX on a weekly chart, you notice that we have a double top here, double top on the VIX on the RSI. That's not a good signal. Tells me the VIX is going to be under pressure again. If you take a look also at JP Morgan from a weekly chart, you see that lows of 09, and take the lows of summer 2011, draw a straight line. We are bouncing exactly on Q, right there. So that could be short term, the market trying to push JP Morgan back to these declining moving averages. So short term, you see that there's a reason why this market might want to bounce. If you take a look at JP Morgan from a monthly chart, same scenario. Take the lows, monthly closing lows of 09, monthly closing lows of middle of to late last year 2011, draw a straight line. You see we are bouncing exactly on Q. So the short term, the market wants to move higher. A word of caution, on a day-to-day basis, this is the S&P 500, and you see that it's very close to its declining 50-day moving average. If it can't move above that, that's short-term bearish. Also notice that the RSI is back to this resistance level here. The last time the RSI hit that level there corresponds to that high. So we are back at this level. If we stall here, as far as the S&P 500 is concerned, then I would expect the 50-day moving average to have confirmed resistance, and then the market is going to be short-term going back to its bearish pullback mode. For now, everything is pointing to a market that wants to move higher. If you find quality breakouts in quality leadership sectors of the market, you want to play the breakouts. We'll keep watching it. If we see resistance on the 50-day moving average, then we might again just stay on the sidelines until the market gives us a broad enough buy signal. For now, play the upside until we find confirmed resistance on the marketplace. Eric Muad with Muad.com. Good luck, peace, and bless.